Hey, what's up, guys? I'm going to talk about AAVE in this video. As usual, this is my opinion, not financial advice. So we take a look before we go into that. Just to let you know, AAVE is ranked at 16 in terms of market capitalization, and the same in Crypto Watch. Okay, so to have a bit of a context where we are. So obviously, it's a little bit already high cap there. Nonetheless, it doesn't mean that it doesn't go up. And in my opinion, there is a good chance that we are seeing kind of a breakout once again, at least to more upside. However, there are a few points to take in consideration to be not yet full bullish. Okay, so I'll try to cover as well that so that we are aware of the signs. So first things first, we have obviously this nice trend, and we have a top very serious volume going on at the top. Almost looks like some sort of distribution, but I do not believe that it is just yet. So I'm just first going into the weekly chart, and we see that we have a nice uptrend. Trend score, pretty much still up, no signs of reversal whatsoever. Another thing that we can do is to switch to the line charts. I know, as some of you already know, that it's my absolute favorite way to map structural trends is to use the line chart and then deploy trend lines. So we have this trend line here that now has been broken for the first time, because obviously time went on and we have more than 3 weekly candles that basically was enough to break the time-based trend, right? So that gives us now the situation that we map the last point of support based on a trend. So basically the touch of one of the closes when we have. So that's kind of my structural support, last point of support. And I have now this zone here, which is the zone where basically effectively the trend has been broken. So I pinpoint those 2 levels as well. So I can go back. Now I go into the daily chart and let's take a look how it looks. So on a daily chart looks like this. So we know that on a weekly, this line here, basically most of the weekly close basically sitting above this line, right? Whereas the daily one is sitting below that level. So what we want now is to move this trend line to fit the biases of the daily, and I will do something like this. So I have give a bit of a discount so that I have more touch points there. So we have this support zone, we have this zone that the trend line has been broken. So I'm going to pinpoint even further that level here. So that's kind of my resistance zone. So what we now know is that we broke the trend line that obviously becomes neutral, and then we have a support range based on a trend. And I also obviously then use my cloud levels, which is the lower side of the cloud. So I have this level, this zone, and this limit zone here. So I can map zones of support from this point. So basically anything inside the cloud is support, but just in case there is more downside from where we are, these are kind of the high probability levels. So and the biggest zone here would be this point here, right? So that's kind of those 2 levels of support that maximum bounce, which coincides with previous weekly averages as well. And we have now this line here, which is coincides with the previous week or the current week average over there. So we have kind of that resistance range that we want to see price getting above this line and finding support above that level to be technically or structurally bullish. So what are kind of the situations that allows me to be bullish? First, obviously, I have a bit of a bias towards the fact that I have kind of this kind of strong candle basically piercing through all these different price action. We have an increased volume there. We are very close to break this uptrend there, and we have a situation that we have what is called the hidden bullish divergence, right? So we have this kind of a higher RSI level at the lower price level, and we have a higher price low level and a lower lower RSI. So this is technically from this point to this point against what we have on the RSI is what is called a hidden bullish divergence, because it's not immediately perceptible, and in these circumstances more often than not we see a retrace, kind of a continuation of the trend once we have this kind of deep RSI correction. Whereas price doesn't get below the previous low levels, right? So we have a structural level that was based on my weekly trend points, which coincides precisely with this kind of point of source of reference from the RSI against the most recent price RSI, and that basically implies that there is a kind of a bullish bias there. So if I go now into the 4-hour chart, we can also, for example, this probably was better to use the daily there, but I can also map kind of a trend line from this point here, and we see a break of that trend. I can now pinpoint the zone where we have there, and I can have even more aggressive structural support for example, for a stop zone. So if I want to decide to make an entry based on a 4-hour chart, ideally the stop should be below this level, because this is effectively where the trend was broken. So that's kind of one of the ways to frame kind of a stop position. So I would, in this case, long where, if we can probably wait for a retrace, or long where we are, because volume is picking up. It feels that momentum is building up, so we have increased volume starting this point. This is quite significant because the volume doesn't kick in immediately on a pump. We want to see strong volume starting on the way down, right? So this is kind of the fact that we have a few down candles here showing nicely steady growing volume. That is kind of very nice. That's what we want to see, because if we don't see these and we see this kind of volume, and then all of a sudden we see massive volume, there more often than not that would be a fake out. But under these circumstances, assigns better probabilities into this continue into the upper side. So what we do, we imagine that I decide to long there, or just wait for the next candle to wait, whatever. I would definitely in this case just long, and just if I have to add a little bit to the position, we could do that, but at least we don't miss the trade, and the stop would be somewhere around this level. So this is still a very wide stop nonetheless. A risk reward is obviously not good because we don't have a target, but I would assume in terms of target that we going to higher levels. One of the ways to do that is to, for example, look using the FIB tool, right? And just have a projected projection, kind of a more or less a rough level of what would be the possible target, right? It doesn't. It's really. I don't really care. At the end of the day, I really want to follow the trend and see the invalidation points of the trend, right? But we can speculate where the price can go, and we have an idea, right? So that's how I approach this. I don't really care about these targets strongly. At the end of the day, it's really about I'm really more concerned most of the time about the downside, the risk protection, right? And then all the rest is just riding the reward until the trend allows us to do. Once we have an invalidation, we quickly quit out of the trend or cut the position in a half because we have an invalidation point, and wait for the regain of the same level that as the trend has been broken, for example, right? So that's kind of one of the criteria. But let's just assume that I have a hypothetical target here, and in this case I have an extra 48 or 50% move, and we have a risk reward of 5 with a stop based on a 4-hour chart under this circumstance. So it's based below that level there. If I want to be even more picky and try to see if the daily or the 2-hour chart offer kind of a sound place for support and resistance. But the thing is, when we go down in the time frames, that what we'll do is that we'll increase at the same time the probability of getting stopped, right? So that's kind of the thing, that the vectors that we need to play out. We need to play out with the risk, the position size, the distance from the stop, and the probability of those stops getting effectively stopped, right? So the lower time frame it goes and the more tight gets those stops, the higher probability becomes to effectively be becoming stopped, right? So that's kind of how it works. So I still believe that the stop in this case for this would be below this level ideally, because this is the structural support. Obviously, if it gets below that level, I think that then we are set for the possibility of us getting into the zone, and this obviously would be a much better risk reward, because the opportunity of making an entry in the zone is obviously much more compelling, right? So in this case would be the visit into the lower side of the 2-day chart of the daily chart, which is also visible. Actually is not visible on a weekly. We don't have a cloud because we don't have enough data here, but it's equivalent to the daily and the 2-day chart cloud, but also confluent with the support range based on the trend line levels, right? So from this point on, we have here a situation that all these ranges obviously the best support that we have, but we might actually not get there, and these would constitute an entry just in case we want to get into the trade. Also, because we have obviously again the situation with a bullish divergence. Okay, hope it was useful. yeah, we'll just leave it like there. And see you in the next video, guys. Take care.